to Titan Company Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. C.K. Venkataraman, Managing Director, Titan Company Limited. Thank you, and over to you, sir.
Thank you very much. Welcome to the Q3 earnings call of Titan Company, to everyone on the call. As you would have seen from the presentation, on the retail sales growth for the quarter has been very satisfying and across all businesses. And the rest of the material is there on the presentation, and I presume you had some chance to look at it, and we can straight away dive into the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, Venkat and team. Just wanted to, first of all, congratulations on the performance. Wanted to understand the demand trends. How have they been shaping up in January? And in particular, if you could, give us some understanding of the jewelry business given the sharp increase in gold price.
Hi, Avi. Ajoy here. Yes, Jan has been quite interesting. The gold prices have been shooting up since December and in Jan as well. But having said that, we are seeing a very good demand in Jan. We are very happy. We know that last year Jan was impacted by Omicron, and therefore it was a weaker Jan month. But despite that, we are seeing a very, very healthy growth in jewelry, including gold jewelry and both, despite the gold price rise. So we are quite happy and gung-ho.
Would you say this is on a 3-year CAGR basis that you're looking at as in pre-COVID? Just to, because obviously YOY-based growth rates might be, as you rightly alluded, there's Omicron in the base. So even on a 3-year trajectory, it's broadly in line with what we saw in third quarter.
Yeah, no, it's good. It's very good. Over a 3-year CAGR, it's even better.
Okay. And on the other segments as well, if it's possible to share, especially in the watches and the eyewear?
Yeah, so this is Suparna here, Avi. Watches and wearables, we've seen a good Jan. And like Joy mentioned, this is not only on last year's weekday, but on the Jan 2020 base. So quite happy with the retail growth.
Okay. Showman from iCare. We had a good month. On a last year basis, growth is over 40%, and if I look at FY20 January, it is 37%. So good month.
Awesome. Okay, perfect. The second bit was on the margins, especially on the watch side. I mean, last quarter you had indicated that in the near term we will try, we see a 13 to 14% margin kind of panning out in the watch business. Just wanted to kind of clarify, was this more annual expectation, or was this, and whether this quarter or with this quarter kind of changes that expectation in any manner?
No, this quarter the margin is lower because of some product, channel and category mix issues. But if you see the YTD margin, it is in that ballpark of about 13%. And our outlook remains in that range.
Okay, perfect. Just one clarification, Ajoy. When you say good, is there any range that you could share with us? Any understanding of what do you mean by good? It would be useful to appreciate. That's all from my side.
I wish I could, but I think there are some pretty stringent regulations on what we can share without having put it out on the stock exchange note. So apologies for that, but we are very happy. This is the best we can do.
I'll take it at that. Thank you very much. Thanks a lot.
Thank you. We have our next question from the line of Percy Pantaki from IIFL. Please go ahead.
Hi, sir. Just wanted to ask on margins. So we've done around 13% in jewelry this quarter. For next year, would you stick to that guidance of 12 to 13, or do you actually think that it's probably going to be sort of at the higher end of that band or might even exceed it?
So Ashok here, I think we have been answering this question quite consistently, that it will be 12 to 13% which business is targeting. Higher and lower commenting for next year is too premature, but that's the channel where definitely team is trying to keep it while achieving growth numbers which are industry leading.
Right, sir. Secondly, just wanted to understand, you did mention that despite gold price going up, the demand is good. So what is really driving that? Because in the past we have seen that when gold prices are sort of volatile, the customer stays back and does not purchase. So why is it different this time around?
Yeah, actually it's something which we've been trying to figure out. In the month of November, mid-November or December onwards, we saw a greater impact of that volatility on customer sentiment for gold jewelry. That time the studded piece picked up a bit, and therefore we were able to, see some good growth. But having said that, in the month of Jan, somehow that has not held back customers. My own hypothesis is that people might have been deferring their purchases in November, December because of these volatility. But come Jan, the outlook also looks like gold may continue to remain high, and it might even climb higher. So, and there is weddings, etc. So therefore, I think people have now kind of decided to get into the market, having waited a little bit in December. But that's a personal hypothesis. I really don't have a deep, data-based insight on this.
Right. And for the quarter, Q3, basically, can you give some color on basically the split up of SSSG between how much of it is due to higher transactions and how much of it is due to a higher bill value? I mean, even if you can't give the exact numbers, any flavor would also help.
Sure. So happy to share with you same store growth. I think that 15% of retail growth, which includes Tanishq, Mia, Zoya. Okay, the Tanishq retail growth is 14 as in the presentation, but if I look at the three brands put together, it's around 15.1%. And the same store growth during quarter 3 is around 9%. In terms of what has driven growth, very interestingly, a majority of the growth has been driven through buyer growth, and some part of it is through ticket size growth. And ticket size growth is a function of both the gold price as well as the diamond prices have been on the higher end. So, but yes, very happy to hear that from our side that it is a growth which has been driven by buyers, and specifically we have gained a little bit more on new buyers.
Okay, sir. That's all from me. Thanks and all the best.
Thank you.
Thank you. We have our next question from the line of Arnab Mitra from Goldman Sachs. Please go ahead.
Yeah, hi, Venkat and team. My first question was again on the demand side. I think last quarter you had mentioned that there was some slowdown in the lower end of your portfolio in jewelry. Has that been a trend which has continued, and anything that concerns you on that side?
It's a mixed bag. There is some pluses and minuses, which we are seeing in quarter 3. Yes, on the lower price and on studded, there was a little bit of a slowing down, but on the gold, it was on the positive. It was not slowing down. It seemed to show a upswing, maybe driven by festive. But in Jan, again, I'm seeing that is no longer a concern. It's kind of come back strongly. So it's a bit volatile at this stage. We are at least pushing more aggressively on trying to increase the number of buyers and therefore feed the top of the funnel in terms of buyer and new customer acquisition, and that's working. So right now, not a concern, but yes, we are watching out for it more closely.
Got it. And there were some news reports that there has been times anecdotally where gold prices have gone at a bigger discount in the local markets. Are you seeing more pressure on gold prices from local jewelers compared to what you were anyway seeing last few quarters because of possibly the import duty gap having increased 6-8 months back?
So I think gold rate and therefore price competitive intensity in Q3 in general was very high. National jewelers, local jewelers, everybody put together, and to that extent, and I don't know this phenomena of the market being at the discount vis-a-vis MCX is more in the last few weeks. In the month of Jan, more than in the month of December and November. So, but because of that, has the gold rate intensity in terms of competitiveness gone up in Jan? No, I think it's pretty much the way it was in Q3. But yes, if it continues like this, there is always going to be pressure because finally there is a lot of unaccounted gold coming into the country, and there is a 15% plus kind of 15% CD, and then if you add GST, it's 18% arbitrage.
Got it. And just one bookkeeping question to Ashok. Is there an increase in gold leasing costs because of global interest rates moving up, given that these probably are linked to those cycles?
For Titan, it is minimum. So far, we have not seen impact. 15-20 basis points, but not more than that so far.
Okay, thanks so much. That's it from my side. All the best.
Thank you. We have our next question from the line of Siddhant Nat from Goodwill. Please go ahead.
Yeah, hi. My question was regarding TEAL. After all this time, it continues to be 1% of revenue and still be loss making. So is there some long-term vision over that company, or is it just going to be like this?
So TEAL has two distinct businesses, One part of business is continuing to do very, very well. The other part of business, which is automation solution, has certain items, certain cost elements, and which kind of came under some thing. But if you look at, we are pretty much okay that full year basis they would still be profitable. And the order inflow situation, if you have read about them, that business which kind of struggled from the profit point of view this quarter actually won the highest amount of order in this quarter. So future outlook is okay and stable. They will kind of pick up from here and hopefully deliver reasonable profitability.
Okay.
We are not concerned about that.
Yeah, but we're concerned with becoming smaller of a piece of the pie, and then it's a distraction, overall. That's the only concern.
Siddhant, actually it's not a distraction because the manner in which Titan Company operates, both within the standalone and with subsidiaries, is a full leadership team dedicated to running each vertical. So there is no real distraction at all, and there is a board which governs the TEAL company as well. And if you look at FY18, FY19, FY20 performances, they were really good. And you must recognize that this is a global company dependent on the airline industry, and therefore in the last 2 years, substantial churn happening on travel and all that. So intrinsically, everything is good for this company and for both divisions as well. The last 9 months were not good for automation solutions like Ashok shared, but we are quite convinced about it and committed.
Okay, that's perfect. Could you share some numbers or something about the UAE business, because it's been there for a while now. So is it profitable, or what's the top line like over there?
This is Denny here from the international business. UAE, we are up to 6 stores across UAE, 5 in Dubai, and now the 6th store in Abu Dhabi. That business, all of the stores that we have launched are doing quite well and growing quite strongly. We are pretty much on track for whatever stores that we have launched. We have had some difficulties in terms of rolling out or expanding the stores. They're a little slower than what we had planned because what we've realized is operating in some of these new markets requires a bit of time. And that is what we are attempting to stabilize.
So is it profitable or no?
Not as yet.
Not okay. My last question would be, any thoughts on the lab-based diamonds or the incentives that were announced yesterday, or is it too soon to think on that part?
Just repeat the question.
On lab-based diamonds, yesterday the finance minister or even the prime minister announced some incentives around lab-based diamonds.
Yeah.
So any thoughts on entering that business?
Actually, you will remember that we invested about 7-8 months back in an American company called Great Heights, which has a brand called Clean Origin, and that is for us to understand the most exciting market for LGDs in the world, which is the US. So we already developed some kind of an understanding. We are not in a position at the moment to share any other plans to anyone.
Okay. Last question would be, what's our outsourcing mix in jewelry? Because our competitor, ideally, they outsource most of their jewelry. So, any margin that we can gain by manufacturing ourselves or something like that?
So it varies between gold jewelry and studded. At an overall level, because a lot of the gold jewelry is outsourced and a lot of the studded we make in-house, I think it's about 70% will be outsourced, rough and ready.
Okay.
Also, nobody really makes gold jewelry themselves, not even other jewelers in the country.
Correct.
That makes sense. And there is so much of innovation that the vendor partners bring to the table. And therefore, between margin on the one hand and innovation and therefore sales growth, there's a balanced approach that we have taken for a very long time now.
Okay, that's perfect. Thank you so much.
Thank you. We have our next question from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Yeah, hi, good evening. Thanks for the opportunity and hearty congratulations to Venkat. Finally, New Jersey store is operational. I'm sure you would have.
Pardeshi, I'm sorry. Can you use your handset, please?
Yeah, I'm on the handset. So
can you speak
I said hearty congratulations to Venkat for finally the New Jersey store is operational. I'm sure you could have gone through the pain. But just one commentary, over next 12 months or 15 months, what kind of store expansion which we'll see in the US geography?
So Vinny here, Shirish, again. After having opened the first store, we are looking at adding more stores. So over the next 6 to 12 months, we should see ourselves in the US expanding across another 4 or so locations. We are going after the cities which have significant Indian populations, which is what makes sense for us. And similarly, across the GCC, we have fairly aggressive plans. Having established ourselves quite well in the UAE, we are looking at the other GCC countries, Qatar, Oman, Saudi, if possible.
So you mean to say that over next 12 to 13 months, we should move from 7-8 stores to maybe doubling or tripling that count?
Hopefully more than that. The intent is to get as high as 20.
Okay. Yeah. Thank you, Vinay. My second question is on jewelry business to Ajoy. Can you share some numbers? What is the grammage growth out of that 11.2% what you have reported, and maybe new buyer growth number I missed?
Grammage growth actually may not be relevant because we don't use that in any of our modeling work, whether in top line build up. But in terms of buyer growth, as I said, we had a higher buyer growth than ticket size growth. That was the bigger chunk. And within that, what I can tell you is that our new buyer contribution is 49%. It was 48% in the last quarter. It's 49% in quarter 3.
So similar number is...
Also, Shirish, just one perspective.
Yes.
We are an accessory company. We are not a commodity company, and therefore, while of course we know how many tons we bought and sold, that's not a KPI for us.
I do understand, Venkat. The only question.
Volume, I understand. No, I'm just giving you a perspective. But as the number of customers, number of bills, that is what we look at.
Yeah. So buyer growths are very healthy, and grammage growth we don't really use as a KPI. And new buyer growth was marginally higher than the overall buyer growth. Therefore, we are now at 49% new buyer contribution to the total for quarter 3.
Okay. That's exactly which I wanted to understand from you, Ajay. You mentioned that January, despite the gold prices are up, you have seen that. So the question here is that the similar growth is seen in January, because I thought that because the winter was delayed, I think there is some spillover which would have definitely happened, and the festive season is also some spillover which has happened. At least the trade is saying. So maybe the competition is one angle, but the buyer growth which is coming back to the trusted players is one of the things which is at least the trade is saying. So just wanted to understand your take on January, whether the same buyer growth, what you've said, 49% contribution is continued or it's come down.
I don't have the contribution figure for Jan on new versus repeat and how it was even last year. But overall buyer growth in Jan has continued to be very healthy, is what I can say.
Okay.
And even after you discount for a weaker Jan last year. New to repeat, I don't have a Jan data readily available, and we'll analyze it for the quarter. It doesn't make sense to see it only Jan.
Okay.
Because there's activation, and therefore in activation there is some skews that happen, etc.
Okay, wonderful. My second question is on watches to Suparna. If you can break that 811, what is the core watches and the new introduction which has happened over last 2 to 3 quarters? So basically, if you can say that the core business watches and wearables and the new product contribution which has happened.
Sorry, is the question how much is wearables as a percentage, or is the question how much percentage of total turnover is from new product introduction?
So we met last time about 2 to 3 quarters before. Then you showcased a lot of new products. So I'm more interested on a 9-month. If I look at this number, what is the contribution of the new products which has happened?
Contribution of new product is about 20 to 22%. So which is quite healthy. And now we are seeing that new product contribution is across all channels. Typically, new product contribution high in retail channels, but now we are seeing that even in multi-brand outlets, new product contribution is actually around more than 20%. So that's really where the pipeline, the power of the pipeline of new products has kicked in and given us growth.
Okay, wonderful. Thank you. And my last question on the emerging business. I think finally we have women's segment accessories which is back. I can see that, and you have introduced very good models and the products. So any color, any number, what are we doing, where we have reached, and what is the distribution we have done, and maybe if you can quantify.
Yeah, hi, this is Manish. So you're talking about the Earth brand. So in the women bag category, we have 2 brands, Earth and Fast Track. So Earth is what we've launched in October. So currently it's available on Shoppers Stop, Nykaa, Tara Click, and Myntra. And we have about 25% coverage of Shoppers Stop store, like 27, 28 stores. And the response has been really very good in the last 60 days. So we're planning to expand in the future across various go-to markets, and we are getting great response right now.
So is it many strategies that we will try and look at the large format stores firstly, and then maybe try the e-commerce space, and then maybe get into retail? Maybe I'm looking for a strategy over next 12 to 15 months.
So basically, we want to be present in department chains, LFS, as you said. Online, we're already there. On the vertical fashion portals like Myntra, Nykaa, Tata Click, AJIO, these kind of portals. And we also want to be in the retail network as well. So we'll also have we'll try with the store in the quarter one.
So I got that. I think what I'm referring that in the vision discussion when we came and met Venkat and team, there is a strong vision over the next 5 years. But if from the modeling purpose, maybe another 15, 20 months, 1 year or 2 years, what kind of revenue this business will drive? That's what I'm looking for your help.
Like the FY27 target, you are aware, I think, in that.
I know, sure.
With this, we want to take to 1,000 crore. And I think business is pretty confident and gung-ho about and preparing themselves. This is very, very initial phase and preparing themselves to reach to that. Next year, while there are internal targets, but I don't think we are willing to share at this point of time.
Sure.
But keeping an eye on FY27, the internal preparation and targets are being worked on.
Okay. Thank you, Ashok, and thank you, the team.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, kindly restrict your questions to 2 at a time. We have our next question from the line of Nihal Mahesh Sham from Nuvama. Please go ahead.
Yes, thank you so much and congratulations on the strong performance. My first question was on the jewelry business. If I look at your growth in the festive period, which you highlighted was 17-19%, is it fair to say that November, December saw muted performance and then we've seen an uptick again in January? Has that been the trajectory over the last few months?
In a simplified form, perhaps you can come to that conclusion, but the answer is a little more complex because the like-to-like period of 35 days this year, last year, this year included last week of September and so on and so forth. So actually the growths can't be derived in an additive form, weighted average or whatever. But somehow when you look at the entire quarter, that is the reality of this year versus last year. So it is true that our festive period growth was around that 17-18%. But it is also true that the quarter 3 figure turns out to be around 15.1%.
So December itself was pretty close to the quarter average.
Yeah, and December was close to the quarter average. And Jan is continuing at as somebody asked, the CAGR of Jan, 3-year CAGR of Jan is in fact better than the 3-year CAGR of quarter 3.
Understood. This is helpful. The second question was on the jewelry margin. I know it is in range, but just to deconstruct it versus last year on a higher revenue base and a similar studded share, there has been a YOY contraction. Just to understand, would it that be because of the store addition or the contribution from the international business or any other aspect you could just help highlight?
So a couple of things. One is we knew that the market is volatile and choppy, and therefore when the going is good and customers in the market, we said we will go aggressively after growth. And if that meant that we needed to invest in growth by way of competitive offers, by way of higher marketing investments, and overall in general a higher growth-oriented approach to the market, we've gone ahead and done that. Further, for the quarter, we've also actually ramped up some investments in digital and talent, etc. That has also contributed to some extent. So some of these things have possibly, shown a slightly downward sense on the EBIT as you are gauging. But having said that, we had always maintained that it is better to look at a 12 to 13% range, and it's pretty much in that range. Compared to last year, it looks a little lower, but then last year also had some significant one-offs, which we had mentioned in the earnings call as well.
Absolutely. Just one final question, if I may, that this quarter, I see a significant difference between the UCP and our reported sales also in jewelry. Any specific reason? Maybe stocking to the L3 channel in the Q2 quarter?
Yeah. So actually, if I just look at UCP to UCP, it's a 15% growth for all our brands for the quarter. But when you look at primary, it may look like 10-11% growth, 10% growth on the domestic business. So the difference is entirely due to the timing of upstocking, downstocking of L3 channel between quarter 2 and quarter 3.
Thank you so much. I wish you all the best.
Thank you.
Thank you. We have our next question from the line of Sheila Rathi from Morgan Stanley. Please go ahead.
Yeah, thanks for the opportunity. And congrats on great set of numbers, especially when I look at the World Gold Council data for the quarter, it suggests that jewelry demand was down 18%. So in that context, the growth has been very strong. I just wanted to understand, and just picking up from the presentation itself, that the company is pursuing market share growth through high visibility marketing, inventory infusion, and competitive offers. So just wanted to understand what exactly are we doing that has resulted in such stellar performance versus the industry?
Quite a few things actually. There has been expansion of existing retail stores as a program which has been on for some time, which is as big as the new store additions itself, for the year. So that has helped. Inventory infusion, and specifically in markets where we are low on market share and the opportunity is high, some south markets, some east markets, etc. And even in some of the mega stores, we have a bunch of large stores which we are pursuing more aggressive growth in, so we've infused inventory there as well. We have also done a lot more work on the high value side, both on studded, solitaires, as well as on polkis, and that has also given us very good traction. And a lot of theme design collection launches during the quarter, whether it was Alekhya for the rest of the country or Chora for Tamil Nadu, and several other, introductions, Kalami Joy, which was in December. All of that, the design collections have also played a very big role. So combination of many things, very difficult. And we've also seen very good traction on gold exchange program and golden harvest enrollments. So we are now back, to pre-COVID levels kind of contributions for these two growth engines as well. So pretty much most of the growth engines are firing very well.
So just a follow-up here, and sorry if I'm wrong in terms of my understanding if I'm wrong. You said that South and East have done well, so probably that would have helped you with respect to the growth. But with respect to the market share gains, is it any particular market where we are gaining market share? Is it the large cities, tier 1 cities or something of that sort?
So across regions, I would say, so I didn't say South and East have done well. I said we had launched specific collections in those areas. East has been a little muted, as it has been for the rest of the market as well. Perhaps driven by some amount of rural demand still kind of catching up. But this year, metros have done particularly well, and I would say we have gained share certainly in the South, certainly across metros, most definitely across certain markets of the West. In East, I think might be we have sustained our market share, but the East overall has been a little more muted this year.
Understood. Just one more final question I have is, what was the share of wedding demand this quarter? And also, in the presentation you mentioned that high value share has gone up in the overall pie. So if you could just give us some quantitative number there, and is it to do with wedding demand or anything else?
High value studded has gained a percentage point from what it was, and it is now, as I said, pretty much as it was pre-COVID level. So high value studded has done well, solitaires have done well. Wedding specifically has been little more muted in the quarter. I am personally expecting it to become better in quarter 4, and perhaps some of that is showing up in Jan. But wedding has been a percentage point lower in terms of contribution. So we are at around 19% as opposed to the 20% that we were last year.
Thank you. Thank you, Ajay.
Thank you.
Thank you. We have our next question from the line of Nilay Shah from Moon Capital. Go ahead.
Thank you. Hi, am I audible?
Yes. Please go ahead.
Hi. Okay, so the question essentially is on the demand again. Ajay, you are reluctant to give the actual numbers for January, Can we benchmark them to the 20% sort of medium-term growth target that you have? Are they in line with those numbers? And essentially, over the past few quarters, you have been giving some of these numbers. So even last quarter, you spoke about 17 to 19% growth, festive to festive. So given that we are in this uncertain environment, can we be a little more precise in terms of what the Jan growth was? Or if you don't want to give numbers, just the benchmarking versus the 20% that we've spoken about in the past.
They are certainly better than what have been there. If I look at the CAGR, over 3 years, because it is difficult to conclude on Jan purely on a year-to-year basis because of last year being. So when I look at a CAGR, as I said, it is certainly better than the 3-year CAGR of Q3. And therefore, is it in line with what we are hoping to grow going forward? Certainly, yes. I would hope it's even better as we go forward into the quarter. So actually, it's pretty positive. We are absolutely happy with Jan.
Perfect. Thank you. That is very clear. The second question is on the margins in the jewelry business. Now, I know that, we've kind of put this down at about 13% margins. But if I think out the next 2-3 years, given the way we are growing, if this 20% growth rate was to sustain, how do we think about operating leverage flowing down into the margin line for the jewelry business?
It's a good question. We are also trying to put our heads together on this for an upcoming board meeting in which we are going to discuss the next 4 years. And it's ultimately a conversation around growth, profitability, and ROCE, and how do we prioritize these 3 different metrics. Sorry to confuse you in some ways on that front, but it is a function of what choices we make. And so I'll leave Ashok to kind of throw some.
Let me add on this, while we may plan, but market is always very dynamic, where you need to respond almost on week and month and quarterly basis. So whatever you may have planned and it looked like that this kind of operating leverage should be coming in, actual may be slightly different than that. Your question and logic is right. As we are growing at the pace we are growing, there should be some amount of operating leverage coming in, and we should have a positive bias towards improving margin. But as I told you, market is very, very sometimes dynamic and competitive. We are
understand.
Yeah, so that's where I will leave it rather than. So we will play it as we go. We are mindful that we need to kind of deliver that.
Ashok, I'm not talking about the next 1 or 2 quarters, slightly longer term. Your predecessor basically used to say that if we are able to get this 20% growth, we'll be very disappointed if the margins don't expand. So over the medium term, would you still hold the same view that if you are able to grow at this rate and the market remains relatively buoyant, you will be disappointed if you don't get the operating leverage coming down to the EBITDA?
Yeah, so the point is that is what I'm trying to explain you, and Ajay tried to explain you, that we need to make certain choices. You are right, but market competitive intensity and our kind of investments would decide that, actually. But we have been maintaining that in next 12 to 18 months, we want to deliver growth at 12 to 13% EBIT margin band. And that is stage. And that's the 12 to 18 months view.
Nilay, since I was party to the predecessor's comment, let me just give a perspective here. Finally, the sales growth coming at the same gross margin levels in a business helps you deliver expanded EBIT margins. And the competitive situation in 2017 and 2018 of a certain level. The competitive situation in the jewelry industry in 2022-23 is at a much higher, more intense level. And therefore, the same sales growth may well come at a gross margin dilution. So that is the dynamic situation that Ashok is referring to. And therefore, if that happens, then the same leverage which was possible, which Subbu could state it in that manner, may not be possible today, and for us to state it with that much of clarity and certainty.
Got it, Venkat. This was clear. Thank you very much, guys.
Thank you. We have our next question from the line of Manish Poddar from Motilal Oswal AMC. Please go ahead.
Hi, thanks for doing the call. So just two questions. One is, if I look at the presentation, I think there's been a 1% market share improvement from the previous quarter. So I believe this you generally do when you do some market study. So would you like to highlight any other data point or any other analysis which came out from the data set?
Yeah, actually, it's an internal estimate. We are, because when we were looking at the deck, it looked like we had not reviewed that number. Last year's number looked like a 6% share based on an estimate of about 400,000 crores. There are multiple views between 380 to 430. Our internal estimate is about 400,000 crores was last year's jewelry market size overall, and we were around 6%. It looks like, if I look at the trailing 12 months, we are 6.8% based on our internal estimates again. We keep doing this constantly and a competitive assessment month on month, quarter on quarter. So it's not a one quarter phenomena that you should read into. I think it's more like taking the previous 12 months. And likely to be this fiscal kind of number. We may creep up towards 7% from 6.8 or whatever. A lot depends on the next few months as well.
So would you have also done any, let's say, slice and dice, let's say for wedding market share or let's say studded market share, any sort of analysis on that front?
No, not really. It's not easy because the industry quotes a lot of figures when it comes to wedding. They keep claiming 60%, and frankly, I've not been able to figure out how do they get 60%. It's tough, and how they calculate it. And on studded, certainly our share is higher. On high value studded, it is certainly lower. Yes, we have some estimates, but I think we would not, share a segmented kind of market share because it's all heavy internal estimates, and we would rather share with you more qualitative. Yeah.
So just a second, Peter. Then would you be able to help me understand what is the pricing inflation which you're seeing in diamond prices?
What is the pricing?
Inflation in diamond prices. Because if I look at Rappaport prices, they are up roughly about 35 to 40%. So I'm just trying to understand, what is the sort of inflation which you are witnessing?
So our estimate is around 15%, but this is a mix between solitaire and smalls. Smalls have gone up and have not come down, and they remain higher. So smalls could be 20% higher. Solitaires went up and then they have corrected back down, but they're still a little bit higher. So the average between the two, I would say, is around 15%. A lot depends on your buying efficiency as well as when you bought it. We did take some calls on diamonds pretty early on and bought them early. So therefore, that's the number we are seeing.
And this is for this quarter? This is for 9 months? Would you be able to help me with the 9-month number also?
This is as it stands for the quarter, but it is the effect of the input cost will be based on what we bought over 9 months actually.
Right.
This is cost of goods sold. If at all you want to look at it from that angle in this period, I would think it's about 15% rough and ready.
Got it. Great. Thanks. Thank you so much.
Thank you.
Thank you. We have our next question from the line of Aditya Gudibande from Piper Serica Advisors. Please go ahead.
Good evening, team. I have two questions regarding the watches and wearables segment. What kind of contribution does the smartwatches bring to the revenue of the watch and wearable segment?
So right now, for this quarter, it was 10% of the total sales was from wearables.
I see. And what kind of growth do you expect in this segment, and what is the strategy for the company to compete with other pure tech competitors in this space?
So we are looking at triple-digit growth numbers in this segment because the opportunity is huge. The smartwatch market in India has exploded in the last maybe 18 months. And fueled by a lot of new product introductions and a lot of tech features from all the competitors. Our strategy at a broad level is to play with our two brands, Fast Track and Titan, with the best of features and enhanced with better design and our own tech team that actually puts together the apps and the experience. Going forward, the strategy will involve customer propositions that go beyond the mere device play that is currently going on, in full swing.
Thank you very much.
Sorry?
I'm sorry, you were not audible, sir. Can you repeat?
I said thank you very much. That was insightful.
Thank you. Thanks a lot.
Thank you.
Thank you. We have our next question from the line of Vishal Gutka from Phillip Capital. Please go ahead.
Yeah. Hi team, Vishal here. I had just two questions. First is, what is contribution of gold exchange during this quarter, and has it gone up because the gold rates have been going up? Generally, what we have seen in the past that contribution of gold exchange keeps on moving up in the month of Jan. Have you seen that? And does gold exchange earn similar margins, or margins are a bit different versus a normal business?
The gold exchange contribution is up this quarter over last year's same quarter. It's around 30%. It has gone up in the quarter also partly because we have driven some aggressive gold exchange related offers in the market, which is part of the investment I spoke about. Especially given the fact that we saw gold prices going up, and we are continuing that this at least the next couple of months. Jan has been part of that. So yes, that has contributed to the growth. And you're right, the cost economics, unit economics are different for gold exchange. If we get a certain quantum of upsell, people come in with X grams and they buy X plus Y grams. When the upsell is at a certain level, it breaks even. And so far so good. We are seeing that. It has some impact on capital because you're buying on spot instead of GL. But otherwise, yes, we are happy. And you're right, when gold prices go up, there is a tendency. And we have also pushed for that.
Got it. Sir, my second question on gold-coated silver jewelry. Our ground check suggests that a lot of jewelers have started gold-coated silver jewelry. I just wanted to hear your thoughts on this segment. Are you into this segment? If you're not into this segment, then what is your thought with respect to entering into this segment?
No, we are not really into this segment, and I don't think we will be in that segment. In Tanishq, the brand, I think it's better that we stick to what is authentic and direct. If it's gold, it's gold, and it's not gold-plated, it's silver. Yes, there is an opportunity. A lot of jewelers do that. Price points are low, but we are not operating in that segment. I don't have a sense on the size of that market.
Got it. And then my last question on the franchising and expansion, even the gold prices are going up. So the working capital requirement for L3 kind of franchises goes up in a very significant manner. So are we expected to see bit lower store addition with regards to franchising expansion happening in the upcoming 12 to 18 months? L1, L2 can continue, but L3 format, it could slow down a bit.
Actually, not really, because ultimately, even the sales is a function of the gold price. So, it's not a big deal. I mean, there are enough and more franchises very, very keen to open up Tanishq. In fact, L3 sometimes more than L2 because the margins are sweeter. So, no issues on that. And we see a lot of opportunity out there for franchisees who are wanting to come in L2 or L3.
Okay.
We are not seeing
Thank you. Okay. Thank you, and sir, wishing you all the best for the upcoming quarter.
Thank you.
Yeah.
Thank you. We have our next question from the line of Sabyasachi Mukherjee from Centrum PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I have two questions. First, can you comment on the reason behind gross margin decline?
Gross margin at company level, you are talking about any particular business?
I think you are referring, and I think we spoke at great length in the beginning of the call about jewelry segment margin performance in this quarter, and that being the dominant business, it reflects at the company level. And in this quarter, we talked about our pricing, growth, offers, etc. And we also talked about that in last quarter 3, there was a one-off 1% sitting. So you need to make comparison accordingly. And some of the benefits which we are sitting in earlier quarters also, like diamond pricing gain, the kind of significance which was there in quarter 2 or custom duty, they are also tapering off quite substantially in this quarter.
Okay. Understood. Second question, I wanted to understand a bit more on the like-to-like growth of 9%. So if I were to break it down between, let's say the sales is basically a product of the average unit price of a jewelry and the number of items or articles sold. Now, if I look at the gold price movement, it is approximately 9% up year on year. In your presentation that is mentioned. Then comes your comment on that the buyer growth has mostly delivered this 9% growth. So is it fair to conclude that the buyer growth was there, but then the average item bought by a particular buyer had fallen this quarter? Is it a correct assessment?
No, let me clarify. At the overall 15% growth, the larger contributor is buyer growth. But when you come to same store growth of 9%, I don't have an exact fix, but I think both ticket size and buyer growth are there. Now, normally when the gold prices go up, let's say in this case 9% or 10%, the ticket size does not go up in the same proportion. People do adjust because they have a certain budget. So they do adjust the grams that they purchase. May not be units, maybe grammage, depending on whatever works. They operate with a certain budget. And therefore, in that sense, we don't. So there is buyer growth and there is ticket size growth, but the ticket size growth may not be exactly equal to the gold rate increase.
And between these two, the buyer growth and the ticket size growth, out of the total 9%, is it evenly poised, evenly split between two, or there is a skewness in one of these two?
It's good. Both are good. I wouldn't be able to go further on that. Let's say it's a mix of both. It's not one or the other.
And any guidance on this same store growth for the medium to long term that you to call out?
In what? In Titan?
Medium to long term,
we chase certainly every store has a business plan and there's a same store growth plan. So we hope to do better than that in the future. But yes, there is, and depending on the age of the store, of course. But overall like-to-like growth has to continue to grow because stores have to continue to remain as profitable, if not more.
Safe to assume 8 to 9% kind of a growth you would be able to achieve in the medium to long term?
Should be better. Yeah. Why only 8 to 9%?
Okay, better. Great. Thank you. That's all from myself.
Thank you. We have a next question from the line of Devanshu Bansal from Emkay Global Financial Services. Please go ahead.
Yes, sir. Hi, thanks for the opportunity. So we are making inventory investments through additional infusion at stores. While this is reflecting in a stronger growth profile, but do you expect working capital to increase from current levels?
Working capital has gone up, but in our case, because of GOL, the capital employed is still under control and pretty much where it was. But yes, of course, you expect inventory to go up. But it may not go up to the same extent because on capital employed, we might be able to do a more efficient play out there.
There are 2-3 levels, like one is of course gold rate and diamond rate, also contributes to rupee value of inventory. While that's the number which kind of you see in the reported numbers, not this quarter, but last quarter and in quarter 4, you will see that number. Then there is, so one is that rupee value and then the turn part of it. We keep our eyes on the turn, but it is right that some of these places and we are taking conscious call of some inventory intensity going up. But overall basis, we are keeping a close eye on our inventory efficiency overall. And that trade-off decision also sometimes, again, growth, margin, carrying cost is done meticulously.
Good. So the incremental growth, etc., should not necessarily result into increase in ROC profile for us. Is that a good understanding?
So right now, idea is not to kind of significantly improve on again inventory terms, but over the medium to long term period, some improvement can be expected.
Got it, sir. Thank you.
Thank you. We'll take a last question from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi team. Thanks for the opportunity. I have just one, question. I'm sorry, it's again around the whole demand scenario. I wanted to know what's your read on the consumer sentiment at a broader level. For jewelry, I can understand there are various nuances. Probably there are more wedding dates. There's, anticipation of gold prices going further up. And of course your own initiatives to drive market share gain. But when you look at other categories, and you do now operate across host of discretionary categories, how are you sensing demand, consumer sentiment? Because, most of the other companies are kind of calling out some caution on urban discretionary demand.
Hi, Latika, this is Venkat here. I think the biggest advantage that Titan and other companies like Titan have is the consumer segments from which the bulk of the business emanates. And those consumer segments are sitting in the top half of the income class pyramid in the country. And they are much of the time substantially removed from the effects of inflation. And therefore, from a near-term and FY24 point of view and even further, that is an advantage that Titan has, one. The second is that the exceptional database that we have here, 20 million plus in-circle membership with a deep understanding of their preferences, of their purchase history. And on top of that, many millions of them personally known to our staff, and therefore a sale is a telephone call away in a sense because of that relationship. So the intrinsic ability of these segments to buy things and the relationships and the understanding that we have with many millions is the difference that Titan Company has in this overall situation that you're describing. And therefore, we are quite positive about calendar 23 and FY24.
Great, Venkat. Thank you so much and wish you the best.
Okay, thank you, Latika.
Thank you. I now hand the conference over to Mr. Venkataraman for closing comments. Over to you, sir.
Thank you very much for all the probing questions and all the best wishes as always. See you in the next quarter.
Thank you. On behalf of Titan Company Limited, that concludes this conference.